All right, hello everybody. Welcome to another weekly webinar. Hope everybody's doing well. Um, like I was saying before we started, I've been really busy with just trying to finish these books. Like I want to finish the books, and then I have like a cheat sheet that I'm making for the group that I want to finish up. And then from there, I really just want to then focus solely on asset, focus on the automation, and focus on finishing up these indicators too, because I'm trying to get this stuff rolling just so we can um focus on other things, right? But yeah, let's go ahead and get started. It's been a an interesting week. Actually, I'll just show you guys yesterday's trades and today's trades. Where is let's start with AUD USD. So as you guys know, I like to trade Asia, and as of recent, I've been kind of just shifting through my watch list a bit, and I've been trying to look into more of like the indices and more of the commodities like gold and stuff like that because excuse me, I was doing the math and I was like going through my history, and the I pay a lot in commissions, like especially through trading FX, like just by doing like the comparison of like let's say AUD USD to like gold. um my lot sizes are like maybe 10 times more, more than 10 times over on AUD USD than they are for gold. So by default, I'm paying just so much more in commissions. And like for example, here, like this is like a 3 pip stop, right? And so a 3 pip stop, if I'm paying $7 a lot, then that means that I'm paying an extra $21 for every lot that I'm trading. Um, so let's just say I'm trading 5 lots, then if I have um a 3 pip stop, then that's an extra. So 5 times 7, it's an extra like 35, which means that it would add on like over, I guess, 10% of my risk, overall risk, which is like, for example, if this was like 3 pips times 50, it's like 150. I'm adding like an extra 35, and that percentage is pretty fucking high. You know what I mean? So compared to like XAU, where the lot sizes are way smaller, then I'm paying so much less in commission. So I'm kind of just trying to investigate and see if it's worth the switch or not. That's why I've been trading a lot of like US 30, a lot of Nasdaq, a lot of gold, etc. But anyways, back to the scenario here. So clearly we are bearish, right? And something I've been kind of thinking about as well is the just how do I want to have a bias before I get on the charts? And like what do I mean by that? It's like it's very common for people to like get on the charts and let's say that like the night before, right? Let's say you live in the US and you trade New York session, and you're looking at Asia markets before you go to bed, and you kind of just prepare your bias for the next day. That's a good thing, and it's also a bad thing. It's a good thing because obviously you might know what you're looking for, if this then that, but at the same time you could also fall under the condition of realizing that you're married to a bias, and you're gonna pretty much only try to trade that bias even though you're confident that it could go in the other way, if that makes sense. So whenever I get on the charts, I'm just trying to become very, very detached to the point where I don't give a fuck what is going on. I'm just going to see, is there a model in play, and is there a scenario that I can act on? And that's it, right? Trying to predict rather than react. But here's the thing too, like reacting is predicting as well. Like trading based on a reaction is a prediction, but it's an it's a lot more, I don't want to say educated, but there's a lot more logic in than theory per se. Like for example, if I'm trading a reaction, if I'm trading this because I see that we have a sweep and that we have the reaction after the sweep, then yes, like it's a reaction, but I'm still predicting for this to be here. So like it's kind of all the same. It's more so like, are you conservative or are you aggressive, right? Like if I'm bearish, right, selling up here is a little bit aggressive because the internal structure is still bullish, right? Whereas now I'm a bit more conservative because I wait for the full transition. You see what I mean? So like it's still a prediction, right? Like don't get that twisted. Like like trading models are patterns. Like, you know what I mean? Like people say don't pattern trade. Well, everything's a pattern. You just want to add dimension to it so it can have more probability. Whether it's the model, whether it's the time of day, whether it's the assets trading during that time of day. Like really, I look at it as conservative and aggressive. Like I don't care if it's like predicting or reacting. They're the same, like technically, like to an extent, they're both the same. But anyways, back to scenario here. We're currently bearish, and I'm looking to continue to be bearish because we swept right a previous high. So I didn't mark up my fib here, but this is technically like a fib. However, the only reason why I didn't mark it was because of this. We had an internal SD or an internal LG, right? So I would have considered this to be like super A plus if um we didn't see this internal reaction. If we just saw this move down and then we come back up and then we take this out and then we have the sweep like we do here, then I would consider it A plus. Like I'm 100% confident. The only reason why I'm not confident in it is solely because of the sell to buy move here. But my reason for execution was the internal momentum. Internal momentum is very strong, and I'm now seeing that stuff kind of go in there. Back to this. So clearly we see, right, a order flow continuation. As you can see, there's a final buy to sell. That's what's wicking away price here. So I'm now looking for either the mitigation of this, which is what I was initially looking for. I just didn't get it. But really, I could have just stuck on an M10 time frame and I would have just used the entire region as a potential entry. Right. But unfortunately, I was able to not get that entry, but I was fortunately able to get the continuation to the downside. And this one was pretty unfortunate. Both of my trades last night were pretty unfortunate, which is just kind of luck of the draw. Because here in this scenario, the reason why I'm trailing my stop aggressively, especially after we swept here, is because of the SD, right? If we have the sell to buy, then I can anticipate potentially that within this region, we could potentially buy because not only is there a sell to buy, but if you look at AU, like we're very, very deep into right this week's price action being bearish, right? So we're pretty overextended. So the odds of this giving me that full continuation, right? They're not the best if I was to be selling, right? Let's say back up here, back up here, back up here, where I still have targets to meet. Right here, right? We've already swept swing lows and we're bouncing out of a daily POI, which is what my box is right here. That's the box here. So I'm trying to aggressively move my stop as it goes because I don't want there to be something stupid happen where we have a mitigation of like some extreme POI and then have this go up, but it only worked out because there's a POI and then there's like a reaction and then this would be technically bullish, right? So it would be bullish from that sense, but the overall momentum is still down, which is why I favor the downside. So I'm kind of covering both ways, if that makes sense. But unfortunately, this ended up actually hitting my take profit, I believe, after. See, it ended up hitting it after my short stop was hit. But if I was to have held this, it wouldn't have made sense. The reason why is, like I said, after we break through here, right, we now have a solidified low, which is a sign of unwillingness, which means that the sell to buy is technically valid. And we have low, high, pullback, and we should be anticipating the reversal trade, right? But obviously, that's a reversal mindset. That's not something I would want to trade on. But it just makes me not be bearish at this time, right? So I'm not technically bullish, even though the order flow is favoring bullishness because of the overall momentum. But I also can't sell because the internal order flow is bullish, right? So I could say that I could have held and it would have worked out, but 9 times out of 10, the same scenario probably wouldn't have played out in this way, and I still wouldn't have probably traded it in this manner, right? So that's just kind of luck of the draw, right? Um, Scenario number two, I was looking at a bearish sweep from Nas, which is also kind of very similar what happened. Oh, wrong screen. Very similar to what happened to AUD right? Where the trail stop was hit, right? And the reason why I'm looking for my sweep here is you guys can see bearish structure. we see a bearish range, right? And then that bearish range is being swept. So technically, this is order flow completion of the internal leg, internal bullish leg, aka order flow. So we have bearish leg, bearish leg. This is being swept. So now I'm looking at the transition here to give me a sweep model to then pursue here. And it was a pretty decent model. I'm not gonna lie. Um, let's just go back here before we hit TP. Um, if you look at this time, right, and we're looking at the order flow here, right? My reason for entry was this internal buy to sell. Why? Because we have low, high that led into the wick of the range high, right? Which is now, if we have the transition here, then it confirms this as a potential sweep model. But obviously order flow is still technically bullish, and I'm anticipating this as a reaction, as a failure, right? Which is technically order flow disruption. So if I have order flow disruption here, then I'm just going to trade the entire buy to sell move. And that way, or I could also have the support of the M1 order flow and I have an M1 inefficiency fill to play, right? So does this execution make sense? Yes or no? Do you guys understand where I'm getting the sweep model from? Right, bearish structure, bearish internal range. We swept that because internally there's bullish structure. So the order flow is completing. And then after the order flow is completed, it swept that high on a bearish range in a bearish trend. And then I'm looking for the transition internally. Right? Does that make sense? Yes or no, guys?
I don't see the transition, bro.
Aggressive transition at that, yes. But my transition's occurring here after that break.
So
That
that's
break with
basically
momentum,
unwillingness
sign of
is.
unwillingness. Mm-hmm.
Oh yeah, I see it now.
So because that broke and we have this internal high not taking out the high, then that's unwillingness. But it's also order flow disruption because this is a POI. So like I'm sure if I went to like seconds, it would probably show better, but I don't really like to look at seconds anymore. I don't really care for seconds. But yeah, there's unwillingness on this high based on this break of structure, which is a micro break of structure at that, right? Um, But yeah, and then the inefficiency fill is technically another entry. So whether this is entering because of the inefficiency fill here or because the buy to sell is being mitigated, doesn't matter. I just want to make sure that I'm in the trade and that my invalidation is set. But um, but yeah, this one also ended up being kind of like AUD where it ended up, kind of being consolidating, gave me one reaction, then gave another reaction, and then gave me the full move to the downside, which is cool. But like this is not really tradable for me, right? Unless I'm looking for like a sweet model here, like for London, which I wasn't looking at London for this. But for example, here, once again, we kind of have a similar pattern where we have where this high has held the internal bearish range, we break structure, right? And then we have a sweep. So if there's a transition here based on the bearish range sweep, then I could still continue lower because the overall direction is still bearish. Right. And even if we zoom back in here, like if we were still here, right, the internal is bullish, but the external is still bearish. You see what I mean? So I can probably have traded that if there's like a scenario. Yeah, actually, I don't even think I would have gotten an entry here. Yeah, I don't think I would have gotten an entry there. I would have had to assume the engulfing, but but yeah, either way, nothing really to complain about. I still got a short stop on both of those, but my trade of the week was definitely EU. EU yesterday. At first, I was looking at for the people in the private group, I started mentioning the scalping strategy, which is if I'm gonna make it simple, if I'm gonna dumb it down really bad, it's it's CVD divergence, engulfing, and sweep. If we have a sweep, pretty much looking for CBOS continuation, right? If we have a sweep and then there's divergence and then there's an engulfing, then I'm buying. That's pretty much like the gist. Like I'm gonna put the full details in the book, obviously, but that's like the gist. So I was looking to take the divergence here based on the engulfing, um, and then have this kind of just take me to at least here. And unfortunately, it took me out. So as soon as it had broke structure here, then I started to aggressively move my stop. But the reason for the entry here, or the reason for me to move my stop, is like I'm entering here. I enter somewhere around here, but once I get to a 1 to 2, I do start to draw my stop. So I ended up having the um having like a small chart stop, getting stopped out there. And then once I saw the actual EU scenario, that's when I started to look for sells. So let me see. I'm not gonna go over that. So yesterday or last night, right? This is like 9 hours ago. My bias at the time was to look for continuations on dollar. Why? Because we're bullish. We've been bullish all week. And this green line is very important. That green line is very important because we still haven't hit it yet. But here on US dollar, because the internal structure has maintained, if we look at this, because the internal structure here for this week has maintained itself and it's stayed consistent with the internal trend, low, high, retracement continuation, because that is still going. I'm anticipating, right, for this high to be ran, right? I believe I talked about this with the private group case studies. Um, but here we go. There, but because, excuse me, because we held structure internally and we've broken structure here, then I'm kind of anticipating this high to be ran, and it's probably going to be ran next week. That'd be pretty like um I don't want to say normal, but expected, right? So if next week I get a sweep and then I get an internal reaction, then I get a sweep, like let's say midweek, and then we close bearish, then I'll be bearish again. But for the most part, I'm still bullish. Um, if this is to go higher, sweep, then maybe there's a potential to be bearish. But if we kind of give a pullback Monday, Sunday, etc., then I'm still going to be bullish. But pretty much the main key for me here is that we're probably going to go higher, right? And that ties to my bias here because we have a CBOS, therefore we're still bullish. And technically there is a sweep engulfing here, and that broke internal structure, but it hasn't broke overall structure yet. However, the momentum has been very low. And if once I zoomed in, this high actually didn't take out this high. So I'm looking at a bullish direction. I'm looking at an internal bullish range. So I'm looking for the bullish range to be swept and then give me a move to the upside, which is kind of what happened. But on the other side, with the DXY, it's very similar as well. This was actually way cleaner of a picture. Why? Because you can clearly see that there is some type of structure being taken out. Therefore, we have a bullish range in a bullish trend that's being swept. So the internal order flow is completed. And then now if I have a transition here, then it makes all the sense in the world to reach back up here. All right. And that was the general consensus for the dollar bias. And this is, mind you, already into London, an hour into London. So my execution on EU, right, was based on the internal transition after the sweep of the high. Which is like here. Right. So my transition here is occurring, right, once I see some type of solidification. The internal trend is still technically bullish. As we can see, the order flow here is technically bullish. So yes, we're sweeping a high, and yes, we have a CBOS, but this is still not ready because we still have low, high retracement. So I'm anticipating this high to be ran. So once I started seeing corrective structure, I saw this internal sweep here, and then we break structure. Then I now have an internal buy to sell. And this break of structure here, this is the final low that created an internal high. This high is now a sign of unwillingness, which is the same scenario that I pretty much entered on based um, with the NAS 100 trade. And so my POI was based on M3. So we swept the high, we had unwillingness, we had a big engulfing. So I'm taking my position based on the inefficiency, as you can see here, the inefficiency there. Um, and from there, I'm aiming for not only equal lows here, but I'm aiming for the external low. Why? Because I just said with dollar that we're anticipating it to continue higher, which is what it did, right? We're anticipating this high to be ran. Excuse me. Right. So that pretty much goes to show the bias. Um, fuck. Right. We're seeing this sweep, right? And we're seeing the internal engulfing. I would assume that to be an engulfing here because on M10, yeah, there was an assumed engulfing here because we reacted from the low and then we engulfed. So I was pretty confident that once EU showed this transition, that once I have my bias set with EU with DXY as well, I'm probably going to get a pretty nice move. And that ended up being like a 1 to 7. Very good trade. Um, and with DXY, if we compare the other one, the I don't think it reached back down here. No, it didn't. It ended up not reaching back down there. But overall, though, still, excuse me, it's still this still pretty much worked out in our favor, and we took out that previous high here. So what now that that's happened, we're kind of seeing some reactions now, but it is Friday, and I'm not expecting this to trade down if I'm being honest with you, um, because the I think the high here has been swept, and then that daily high has been swept, but on dollar, I think it's still gonna get swept later on. Um, but yeah, the general consensus here bullish sweep on dollar, bearish sweep on EU, and I got a pretty good solid trade there. And then I actually had a re-entry here. This entry is actually very interesting. For the people who were in the call, I mean in the call in the private group, we had PMI release, right? And I'm not a big fundamentals guy, obviously. But we did have a positive outcome. And like somebody was asking me, like, hey, okay, what does that mean? Well, good news means good news. Good news means good sentiment. And so we can just look up what does a positive PMI release mean? Right, means that if a positive PMI index release means that the surveyed manufacturing or services sector is expanding, which means business is doing good. That's all I care about. Business is doing good. We have a positive result. It's higher than the expected, and it's a good number. So not only is it a good number, but it's higher than the expected. So it's double good news. So to correlate that to EU at the time, right? Because the news events they came out at 9 a.m. Well, 8:45 a.m. right? Which is now it's 12 now for me, right? But at 8 in the morning, I was looking for this reentry. Why am I looking for this reentry? 8:45 is right here, right? 8:45 candles right here. So as soon as I saw the positive release, I'm like, oh, okay, like it looks like dollar's going to continue to go higher. And if we're looking at this just purely from a bias standpoint, we have a bearish move, we have a bearish CBOS, and we have the order flow complete here and create an LGC. So once we have the LGC, I can anticipate this to go lower. And actually, this actually went pretty high up there, right? Yeah, I could have taken it off the M10, but I actually took the position like into the M15 candle. If we look at the Discord again, my entry here, I took it a little bit into that M15 candle, which is around here ish. Um, But yeah, solely entered. Why? Because of the LGC. But this sweep here is pretty much the entire key here is this sweep here, right? Because what is this sweep representing? Right, this sweep is representing, right, that if we are to break this low after this high is being swept, then that means that the internal order flow is complete. The internal bullishness is complete and it is now broken through. So I now have a closed area of buy to sell where I can capitalize to then pursue the next area of liquidity. Um, so I have good positive outcome in the news. I have a bearish model in play. I have order flow complete, and I have a mitigation plus engulfing to play based off of. So it's kind of, it doesn't really get much better than that. You know what I mean? It doesn't get much better than that. And my TP was here, but I'm aiming a bit lower. I'm aiming a bit lower here, but I did take a lot of partials here. And the reason why I'm aiming lower is just because I'm kind of anticipating this to take out the previous low. The only reason why I'm anticipating to take out this previous low is because we never really topped this inefficiency here. And we did have a bullish reaction, but that bullish reaction failed to break structure. So if we fail to break structure, we have internal bearishness, then I don't see why this won't continue to at least take that out. So that's kind of my small bias there, and it also ties in with the dollar bias that we just talked about, with this potentially taking out that high, um at least in the medium term, right? So that ended up playing out pretty well, and then my chart stop was hit here, right? Because it is Friday. I did take my partials. It is Friday. We just broke structure. Then we swept this and engulfed. So yeah, I'm 100% exiting here because this could be the sign. Maybe not that this is going to reverse, but at least for this to stall. And I'd rather get out with some type of assured profit than to just close whenever the day opens or have this maybe not give me the move that I want. Right. So do any questions or concerns on these executions? Do they make sense?
Hi, Fredo.
Uh-huh.
I'm sorry. So on the second trade you took, I was actually having, I wanted to take the trade, but I was not confident because I saw that bullish momentum. I was bearish. Can I mark on the chart?
Yeah.
I was bearish, yes. Well, sorry. So I was bearish. Okay. Let me delete this. Sorry.
Gotcha.
I was bearish
Mhm.
on the bias. So when I have this high, so I was seeing this as a continuation BOS. Then I saw this momentum here. So I was thinking that it's going to sweep this high again, then look for a sell-off here. So because I was seeing this more like still in a bullish range to
Mhm.
take out this high. Do you understand what I mean? So I was thinking that it's going to take this high because I I not see this as more like a order for completion because I was thinking that when we look at order for completion, it means that we have that a more like a deep equilibrium to discount level retracement that goes higher, which is this is more like a order for completion to me to go higher, then it's completed here, sweep the high, then go down. Do you think I
Mhm.
was wrong thinking that way?
I just think that's a reversal mindset. Like this is bearish on every scale, and dollar is also bullish. But I do see why, because I was also like a bit thrown off with the momentum here. But like I said, the key is this. Because if this high is to then break, then that validates this as a reaction and a sweep. So now I am bullish. And so if this is now being swept internally and then it's breaking structure, then I am now still technically bearish internally. So I have something to play off of. But if this reaction didn't happen and this ended up just coming back down to the POI, then I'm not selling here. I can't sell here because the order flow internally would then be low, high, retracement, and I have to anticipate that to be swept and then maybe a transition to then go lower. Does that make sense? This is the number one thing. This is the key here.
Okay. Thank you.
Mhm. Cool. Any questions, concerns? Because I saw the same thing with Nas. So like Nas, I didn't want to buy this. I mean, I didn't want to sell this because it was so low. Um, and realistically, we did kind of have like a type of sweep here, right? So there was an opportunity to sell here. The opportunity to sell was so we have low into high, we have CBOS, and then we have this internal break, and then we have a bearish break of structure. Therefore, this entire region here is the region to sell. But the reason why I didn't sell is because the RR was really like low. It was like a 1 to 2, and we're just so low in price. Like this has been kind of sinking for like a while, and we've taken out two major lows here. So I'm not saying that I'm bullish, but I'm saying that it's a bit difficult for me to sell. Right. So once I see this buy here, I'm like, cool. Like, like this buy doesn't mean anything to me. Like, still, like this here does not mean shit. Like, we're still bearish. We're still bearish, right? And we have to anticipate that. So if we were here and it's like 5 hours ago, then cool. I'll consider selling it. But um just because something looks bullish, I still have to consider the external direction, right? Just because this looks bullish, I still have to consider the external direction. You see what I mean? Because I don't think this ever transitioned to bullish. Or was this bullish? No, it never did. It was never bullish, sorry. So like I said, as long as we have right a type of manipulation favoring the external direction, then I can at least get a reaction and I can at least either get a break even, a chart stop, or my TP can hit and then it's gonna reverse. You see, like here, if I would have taken that sell, right? If I'm selling after the manipulation, anywhere here, then this low is breaking. I can show my stop at least a bit. And then here we have a internal break, and then we have another internal break to the downside. I can show my stop, right? So as long as I'm trading away from a manipulation that's favoring the external direction, then I'm fine from the entry POV. And more than likely, I'm probably gonna win. Does that make sense?
Yeah, it does. It does. Thank you.
Mm. But yeah, that's all I got for today. Like I'm still kind of bullish on dollar. I think this is still gonna keep going lower for the rest of the day. So I low key should have held. Um, but do we have any case studies to show, guys? I didn't hit. That's whack. Yeah, let's go ahead and go through case studies. What do you guys think about the indicators so far? Before we get into the case studies, do you guys know what the indicators do? Because I have two. One is like my direction, which is like the cool one, but then I have like the basic one here. I'm just gonna make this one free for you guys. It's just so all it's gonna do right now. It only does like it has like 8 sessions. What's it? Well, actually, that's weird. No, it has 6. Okay, no, this has 6 trading sessions you can apply, and then you can have up to 8 time frames. All right, you can have up to 8 time frames here. And they line up with real time, which is neat. They line up with with real time. And I really just use this so I can see, like, for example, if I have my core time frame, which is M5, I can see closures externally and just compare them there. Because like, you know how we said at the beginning of the call, it would make sense to sell here. Then now that we have this internal break, maybe there's a potential to go lower for a bit. But I'm really just using this to see if there's external engulfings, if there's external POIs, how the closures are, then the external of that, etc. And this one I'm gonna make free. I just gotta finish up some last touches on there. And then obviously I have like the direction, which is like I'm not gonna show like the CBOS, RBOS, CBOS, FBOS. I'm not gonna have all the lines like I did. I just want to have primarily the box. And you guys can toggle um which ones to turn on and off. I don't want to show the settings because I need to fix them up still, but um you can have a lot of time frames. Like, let me actually hide this. If I go to paid. Okay, no, it's not going to show them all. I'm not trying to show things on that. But yeah, either way, what do you guys think about these? Are these cool or no? Are they worth you guys' screen real estate or not? Like, while I open up these case studies. Nothing. I guess they're not worth it. Um, yeah, I just use it to kind of track the levels of structure, and they're very conservative. They don't like a micro break of structure, like even on M1, like this is gonna be bearish up until we get a substantial break here. That's when that's gonna become bullish on here. So it's always very conservative and it's always favoring the downside. That's why it uses 3 pivots. Can help you trail stops. Yeah, yeah, definitely. Definitely. That's actually I did not think about that. Yeah, that's actually very true. You can, yeah. But yeah, do you guys think I don't know if there's anything else you guys would maybe want to add onto the free one? Like I tried to add the equal lows, equal highs, but it wasn't consistent enough. It's really hard for it to measure pivots like that. And sometimes, and you guys know that if a low is swept, then I don't consider it equal lows, and it would still mark those out. So I had to remove that feature. But yeah, let's go ahead and just get to this. Okay, sweep. Okay, this is technically my same trade. Yeah, yeah, this is unfortunate. This is unfortunate because the invalidation is still technically here. Right. So when I'm trailing my stop, like I told you, the only reason why I was trailing my stop is because of this sell to buy. But if not, like I have to anticipate if this is not here and this is just a move like this, then I anticipate high, low, break of structure. This is a CBOS, right? So this is a CBOS. So I'm still anticipating maybe the external POI to continue lower. Does that make sense? The only thing that threw me off was this. But technically, this POI is still in play because this is the final buy to sell region.
Yeah. So I took the trade based off because we already very share. So when I just saw that this break here, I just entered here and I trade my
Mm-hmm,
stop loss. Yeah. And I went to sleep. That's
mm-hmm,
what I
mm-hmm.
did.
Oh, so you charge your stop. Okay, cool, cool, cool. No, that's good then. Oh, you did charge your stop. That's good. That's
Yeah.
fine. I'm okay with that because the only problem with not trading based on manipulation, like if your entry is not a manipulation, like obviously here's the manipulation, So if you're trading based on that, then it's really hard for that high to be taken out. It's a protected high. But like if you're trading the internal order flow, like you don't want to get caught up selling here because then you don't want something like this. Like that's the like we want to enter based on the CBOS, which is the manipulation, but I don't think there is an entry here based on what we saw earlier. So it's whenever you do trade these types of scenarios, then you do want to try your stop aggressively if you don't want to avoid potentially having that issue.
Yeah.
Okay, this was today or last night.
This was yesterday.
Hmm. Yeah, last night. Yeah, this is London,
Yeah.
right?
Yeah.
This is pretty much my same trade. Yeah, this is my same trade. Very job, very good job. That's my same trade. Yeah, yeah. This is something you're gonna have to. This is where you're gonna have to make a choice, right? With this, because trailing your stop here is fine if you're anticipating there to be a bearish reaction, a bullish reaction. But realistically, your invalidation is still here, but you're now risking all of this profit, right? For this profit, which makes it inefficient. So you have a choice. Are you going to try to risk the profit, the majority, like the big chunk of profit for a small bit of profit, or are you going to continue to do this and you kind of just milk it out, but you're leaving money on the table potentially?
I
Because
think
like
I kind of,
realistically, like for example, let me show you this. The like my EU trade here, right? Like it could still go lower. It could still go lower, but I trailed my stop because it's Friday and I'd rather not hold over the weekend and I don't want to risk all of the profit that I've already had here. So there's like a couple of ways to go about it. You can either you can either um take partials at your trailing SL and then always have your trailing stop at your invalidation and you can just take partials out, right? Or you keep taking out the whole position, or you just hold the invalidation and you risk more profit for less profit, which is technically inefficient, but it's a choice. It's what are you going to give up here? You know what I mean? Like, are you going to give up some partials? Are you going to give up your full position? Or are you going to give up potentially more of your profit? And that's that. There's no answer. You kind of just got to figure that out. It's like
yeah.
personal preference. No answer's right. No answer's wrong.
Yeah.
And then also like this is also technically another reentry. I was asleep when this happened, I believe, but I was here. So there's technically like a yeah. This is like 5 in the morning. Yeah, there's definitely differences there. Yeah, that would have been another clean little entry actually. Um, but yeah, now that like I said, that's really give or take for you. It's really give or take. What are you willing to give up?
Yeah.
Okay, I like this. It's not I like this. I'm not opposed. I like the transition. I like the unwillingness. Yeah, that's good. I like that. That's actually really good. What day was this?
I think this was
Yesterday.
yeah, 20th yesterday.
Yeah, I like that. I like that. That's a very good position. Because you have a favored direction, you have a CBOS, right? And then you have the internal transition after that break. Closed all there. Why were you looking for bullish here? There's no like no reason to be bullish here. You can be bullish after that swept. Maybe if you get a sweep, right?
Yeah, so I was thinking that this was looking like it could probably go back, then drop. So I just trade my stop loss, then took partials here, then put my stop loss somewhere.
Uh-huh.
Yeah, because because I'm like whenever I take a trade, like my heart is always racing. I always want to be like just go to the profit and just that's it.
Yeah, that's
Or
that's okay.
so
That's
I
fine.
just had to trade it quickly because I was thinking, what if you just go back to my entry then drop again?
hmm Yeah, that's fine. That's fine. Mm. But I guess now maybe you could start testing out partials, like take off 80% and then just see what happens. Because your trade stop is here.
Mm,
And that's because it took out like a wick here. High, low. So CBOS. I maybe anticipate reaction there. But yeah, the invalidation never met. And then you could even try your stop after this LG here. You can see there, LG invalidation there. And then from there, it went to TP.
mm.
Okay, this one I'm not a fan of. This one, I didn't trade GU this week for this exact reason. Bro. Oh, fuck. Bro. Or range bound, you know? Like, fuck. Oh, fuck this pair, bro. Like, there's no tradable, you know? Like, do you guys remember No Man's Land? Who here can define No Man's Land for me?
Yeah, I think the way you mention it is no man's land is, let's say, for example, um, we just more like we don't take high, we don't take low, so we are just like this.
Mm-hmm.
That's no man's land.
So we have a bullish structural range. Bullish structural range. We have a pullback. We solidify the low, right? We then have this is a wick high, right? And then so we're anticipating, right, this to continue higher still. And then we have the high be solidified. So we now have low, high, low, high, and then we have this be solidified low. So there's no new low, there's no new high. I can't justify a trade here. Like if anything, I'd want to be bullish just because of the momentum, but it's not enough. This isn't enough for me to want to buy, and I can't sell because clearly the order flow is bullish. So I wouldn't be able to trade that scenario. Okay, worked out. Okay, you see here, this is if we're trading here, this is your conservative entry. If you're, I believe this is M1, right? M1 move here.
I did not take that because I don't look at M1 again. Because I take
Yeah, yeah. Mm-hmm.
away from M1.
But this is good because yes, this entry is to me this is very aggressive, but once you have the failed reaction here, that to me is the reason why we're going to continue bearish. Two equal lows. That's the only way I could trade that. So if you're trading then this, that's fine. But yeah, you trailed your stop way too soon there. You're trailing your stops way too soon here. Your trail stop is here. And then once you have this LG, then you break, then your trail stop is here. Right? I only trail my stops for LGs and for OFD. Like if I have a pending liquidity, like for example, like if we have this and I took a sell here, then my pending stop, my trailing stop could be there. That's an option because that's if we break that, that's order flow disruption.
Mm.
But yeah, that or LGs, or unless I have like a viable opposing scenario, like with the AU trade where I had a sell to buy in a bearish move. But yeah, hit your TP there. What do you mean to hit your trail stop here?
Like this I mean, this second one, it's three stop loss here. Then this first one here, I put my true stop loss here. Then it also. Then,
Mm. No, yeah, I would say we always aim for liquidity. Aim for the liquidity here and then just be in and out.
Yeah,
Like
I
I'm
took
usually aiming for
partially.
equal lows or equal highs. If I see equal lows, equal highs within my targets, then I'm aiming for that and that's it. After that, I don't care what happens. Because stuff like this will happen. Because now that we've gained liquidity on one way, we now need opposing liquidity to then go continue. Gold. This is also very similar. Like this is bearish, but we're kind of having a sign of unwillingness. We're having bullish sweeps. So we have unwillingness, but we're still bearish. So I'm not bullish, but I can't sell. Any day. Okay, this is fair. Um, I see the vision. I see the vision. I just don't like the high momentum here. I would have loved to see this break and then take it. Like it can work, but there's a clear reason why it won't work. Ah, okay. See that work. Engulfing. Nice. So I wonder what happened after that. Yeah, you see? You see why I would much rather wait for the break here? That break. So then this entire buy to sell move is a POI because it's a buy to sell. So this is now the region, the conservative region to sell to minimum here. And that ended up working out, right?
Yeah.
Yeah. Yeah, you see. Yeah. So this entire region, oof, that would have been actually a very good trade. But like the general gist that I want to get to you guys, especially recently, bro, force the continuation. Force it. Like don't ever think in the mindset of a reversal. Just force the continuation because yes, if there's a bullish POI, yes, there's a possibility it can flip. But the odds are always going to be stacked in your favor if you're trading the continuation of the move, right? Like order flow completion. Like I don't give a fuck if we have even a structural disruption here. If I have a bearish sell after a structural disruption that's bullish, I'm gonna sell this because I'm still anticipating high low completion. Force the continuation. If you force it, things will make a little bit more sense. Just force the continuation, right? Like clearly, just like with the EU, with the whole EU issue, it's like, yeah, I can understand why people are bullish because we just broke a low and we have a high momentum. But this is a CBOS. That's the whole point of a concept, the concept of CBOS. That's a CBOS here. We have a high, we have a low. This is just solidified the range. So yes, we just swept liquidity, but we do need more liquidity to then continue lower. Right. So force the continuation. Always force the continuation. Like here. Um, if this wasn't so low, I would even still justify potentially getting into another sell here, like force the continuation to the downside. But this one I wouldn't be bearish right now until after we get potentially a transition. That's the only way I could be bearish, just because we have LG low high. So I need that to complete and then give me a transition. But always force the continuation. But don't be hasty with the internal structure. If the internal structure, you have an A, B, C leg, anticipate the D, and then now that you have a transition, you can sell. But force the continuation. Always force the continuation. All right, was that the last one? Yeah, it was. All right. Hopefully that makes sense. Equal highs. Okay. So we took a sell based on the engulfing. High, low. Um, I would put a 71. Don't put 71.4, but yeah, but I do like if you took the trade here, that's perfect.
Yeah, I was after the golfer.
Mm-hmm.
and I saw the minor breaking structure, so I just saw that as it wanted to fall.
Mm-hmm. So the reason why I really like this is because yes, bullish internal, right? And I just said that we want to anticipate this high to be ran, but there's a sign of unwillingness because we have, right, the internal low, we have the highs be swept here, and then that internal low is broken, giving you an internal micro structural range. So this is very aggressive to take this perimeter, but it's very valid. And this scenario, I'm pretty sure that went to the low, right?
Yeah, we took those.
Yeah, so that's how you get like an easy what 1 to 6, 1 to 7. But yeah, if you I don't know if you saw the video I made with the CVD strategy. If you add CVD to this type of scenario, that is very high probability.
I'm gonna keep looking for especially if you could possibly drop it in the chat because I've been going through the this
Or it's
came
in the case
from
study section. Case study
all
section.
right, all right, will
Yeah,
do.
yeah. Uh-huh.
I've been going through the first 21 of 2021 those videos.
Mhm.
My idea of structure literally like been well, and then going through Brendan's videos of he had an analogy of you might get lucky and find a good tree if you're not knowing where you are in the forest, but you will always find good trees in a good forest. But you might get lucky
Exactly.
and you might find a good tree in a bad forest, and that really just clicked a lot for me, honestly.
Yeah, Brendan is his intuition is very very good. Very very good. He just understands the IQ side of problem solving as a whole because he's a
Mhm.
scientist, you know? Like
Yeah, I seen that.
yeah, he's a science he's an aerospace engineer. Like this dude's a scientist. Like this dude builds rockets. Like, but yeah, that ties into what I just said with continuations. Like you will find a lot of sells in a bearish trend, right? And then maybe you'll get lucky with a nice little buy, but majority of the time these buys are going to be shit. Force the continuation, right?
Question,
Continuations are good trees in a good forest. A good forest is a good trend or a trend.
question.
Uh-huh.
Each and every time, because guess I took the conservative route of trying to like get in and get out. Should I just aim for all the lows?
Um, well, it depends on what you're currently doing and what's currently happening. Like, are you hitting
Like
break evens? Are you hitting stops? Are you hitting certain risk to reward? Because like with my
um
CVD strap,
mhm.
it's a fixed 1 to 4, but obviously you could always aim for structure lows as well. So like at a 1 to 4, I'll take a good chunk of the position off and then just hold the rest either till structure, take out maybe another chunk, and then kind of just milk it out.
I would say I'd probably get. I've been seeing I got to get a little bit of my direction better because I've been seeing price get really deep retracements. Um, for me, and I'm probably am the liquidity getting swept for order flow disruption. So I'm really like this was probably one of my best trades in a while.
Mhm.
Like because I did the opposite of what I would have done, which is oh my goodness, possible break of structure or like anything to the upside, basically.
Mhm.
Or just looking at how price is falling and just trying to pick a sponsor candle. I more so just followed price action. But I was thinking maybe I should have aimed for the full range. Because I was even though I was bearish for the full range, but I also recognized price could have went higher and then dropped.
Well, that's with every scenario. It could, sure. Um, but really, like you're on the right track because I think I talked about this like last week. Is like the concept of inversion, right? If you understand what inversion, like the models are all of my models are built on inversion, right? Like if you look at like I talked about this the other day, it was like OFD, right? SD, LGC, and the sweep, right? If the whole like the OFD is a failed POI, the SD is a failed structural continuation, the LGC is a failed structural reversal, right? And the sweep is a failed break of structure. Right? These are all failed scenarios that became models. Like for example, like rather than like people tell you to trade the trend, right? People tell you to trade the mitigations. People, let's just start with the trend. People tell you to the trend is your friend, right? But a lot of the time, by the time you can analyze a trend and you want to continue the trend, it's gonna fail, right? So it's not because the market's out for you or like the or like your liquidity or this and that, which I mean technically you are, but our money doesn't really matter. It really just falls down to either the method sucks or you suck. And if I suck, then I'm gonna just look at what I'm trading. I'm gonna look for the failed scenario of when that happens, and then kind of get and then play based on that, right? Like I'm building models based around my failed scenarios of the concepts that I use. So like the V1 course covers like regular structure, covers regular POIs, right? So my models are failed versions of the POIs and failed versions of the breaks of structure. Does that make sense? So you're on the right track. You just look at where you're messing up and literally do the opposite and figure out how to formulate that into a model. That's inversion. Like we're not trying to continue the trend. We're trying to play based on trend failures, if that makes sense. We're not trying to play based on mitigations. We're trying to play based on mitigations that fail. Because that itself is a protocol, it's a concept.
Understood. That makes a lot of sense.
So we're working backwards. We're not we're not trying to we're not trying to trade to win. We're trying to trade to not lose. Right. So because it's a lot of people don't know what it's like to win trades, but they do know what it's like to lose a bunch of trades. So just do the opposite of how you're losing these trades, and then that can result in a winner. So then you build a protocol around that. That's like inversion 101. Right? How do you want to grow your business? Okay, well, how can you fuck up your business? You probably know that. Then do the opposite. Right? I want to get fit. Okay. Well, how do I stay fat? Because I'm probably fat. Then fuck it. Like I'll do the opposite of what's keeping me fat. Like that's the perfect starting point. But it's also like a logic that you can apply to anything. Because then like once you build models around that, the only problem now is gonna be saying no to other trades. Like majority of my winners these days are sweeps and majority of my losers are not sweeps. So I know that as long as I'm trading my sweeps, I'm gonna be okay. But it can fuck me up if I don't trade the sweeps. So I'm using inversion, right, to build a protocol around a failed scenario, which let's say it's like a failed break of structure, right? To then figure out what the winning trade is. So now I just have to say no to all the other trades, whether it's just like a simple engulfing or like a simple POI. So I have to say no to these so I can say yes to these types of trades. So it's like working backwards the whole way, right? And it just showed me more than anything that like it's more so just to reinforce the belief that I'm able to have a coherent bias model play out. Like there's no better feeling in the world for me, if I'm being honest. Seeing my trades play out is the best feeling in the world, right? But and what's cool about that too is let me ask you guys, do y'all get pissed when y'all lose a trade? Are y'all mad? Do y'all feel some type of way?
Yeah, without a doubt.
Well, let me tell you, bro, you're always gonna feel that. I'm fucking pissed when I lose a trade. I'm annoyed, but it's not about concealing the emotion, the idea. It's about accepting it, and then now like I'm not gonna be pissed for the entire day. I'm gonna be pissed for 5 minutes. Then I'm gonna move on. It is what it is. I lost the trade. I can play again. But as you're starting, Obviously, when you take a loss, you know, it might ruin your day or something. Like I feel that completely. It's okay. Well, it's not okay, but it's okay that you understand that it's not okay. Um, so that feeling is only gonna get worse or better, but it's never gonna go away. So it's never gonna go away. So I can only build the confidence to not give a fuck about these losing scenarios if I know the models that I'm trading and I'm executing those models. Because very rarely do I see like my trades hit my stop loss and then give me my TP. Right? Because I know that if I use a proper invalidation, then it's going to, if this is going to break, then I'm wrong completely. Right? But if I do by some chance make some type of mistake where it does hit my stop and then it hits my TP, then that's going to definitely irritate me more because that's in my control. But I'm trying to just build confidence. That's it. Conviction, right? How can I be sure? What do I have to be sure about? And when do I have to be sure to have this type of scenario play out in my favor? Journaling trades helps with that. Yeah, journaling trades definitely helps with that. Like the whole point of journaling for me is to see what you're losing and how. When are you losing and how? Because you want to eliminate those first, and then you focus on the winners. So maybe you might not trade an LGC model because every time you trade the LGC model, you lose. But that doesn't mean that the model doesn't work. It just means it's not working for you, or there's just some type of nuance that you're applying to it, or some intuition that's making that model disfavorable. So you start off by cutting off losers, but you figure out how to get winners by reverse engineering the losers to become winners. Right? Does that make sense? But yeah, do we have any more case studies, guys? Any let me see. Do we have anything in the Discord? PA structure, order flow timing. Those are equally important. Yeah, that's fair. He doesn't have stops though, but at least it looks like a live account. Um, yeah, you posted those. Okay, I think we got a couple more here. But yeah, I hope that's making sense, guys. I hope that's making sense. Okay, this is good. I like this. See, this is better. This is much better. Bearish direction. You're not looking for reversals. You have solidification break, right? You have, right, an LGC. So really, you could have even taken this entire thing here. Like, my only complaint would be that, yes, technically your invalidation internally is here based on that break, but you don't have order flow disruption until here. So the invalidation rule is the immediate external solidified point, which is pretty much what's going to be that what causes the full on reversal. So there's a situation, there's a scenario where you get wicked out here, right? And then let's say you have an internal sweep model, and then it goes in your favor. So I wouldn't necessarily move my invalidation here until this breaks. But this is still better. It seems like it's getting better every week. Sweep. Yeah, I like this. This is good. Sweep because you have the internal buy to sell. There's a solidified point that's breaking through. That's good. I like that trade. I would definitely take partials here or something. And then you have a re-entry based on CBOS. So this is actually a perfect sweep as well, because you have a bearish range in a bearish trend that's being swept. So you have your range, and then you have the internal transition. This is super A plus actually. What day was this? Oh, this is last week. Okay, that's a very good trade. Um, cool. Okay, so okay, bearish trend, LGC, sweep, break. Okay, this is fair. I like this. This is not bad. This is not bad at all. It's not bad. This is not bad at all. Worth taking for sure. Is that the 1 hour? Oh, that's good. That's a great closure for the 1 hour. Very nice. Yeah. You see, yeah. So I would have loved this to be the entry, but I like that you're using the entire buy to sell. So it's very good. This is a very good trade. I wonder if this high got taken here. Oh no, it doesn't look like it. It doesn't look like it. But yeah, this is very good actually. And then there's even another sweet model here. That's a great trade. No complaints there. Yeah, there's no complaints there. Um, hmm. I'm not too confident in this. Bearish range. Yes, you have solidified high. Yes, you have a break. Yes, you have a sweep, but I would have taken this sweep if we didn't get this reaction first. This reaction is kind of throwing me off. Um, if we don't have this reaction sweep, then if we sweep here and then we have a confirmation there, then I would sell. But I don't like that bullish reaction first. That kind of throws off the timing. But let's see if it works out. Nice, very nice. Okay, cool, very nice. Um, Invalidation here. I just don't know why we're reacting here. I think believe this is Asia session move. But yeah, very good trade. I would just say that this is an aggressive entry and low key here is better. This is more conservative, more replicatable, or more replicable, I think is the word. I don't know if you guys can see, but there's a buy to sell there. So that would be the perfect conservative entry, right? Because now you've broken structure. Therefore, you've confirmed this high to be unwillingness. So we just take the internal mitigation. But yeah, overall, very good. Very good. CBOS, unwillingness, break of structure. That's fair. That's fair. That's fair. Assuming the external is bearish, that's fair. Yeah. Yeah, that's fair. I'm not opposed. Yeah, I like that. That's not, I like to do the two closures here on the hour. That's very good. Okay, so trail stop should have been there. But I don't know if this threw you off the engulfing because probably I would probably take this trade with you. Um, the only thing that I guess would throw me off now would be that engulfing there. Once we're in the entry, if I get an engulfing that's opposing me, I usually just exit. But yeah, still that's not a bad loss at all, I would say. But if you really want me to nitpick, just look at this. If you want me to nitpick, that would be the reason for the loss. Um, but yeah, I think that's it for the case studies. Do we have any more questions, concerns, guys? No? Any questions on the stuff that's coming out? Oh, this finally did pop off. That's good. Hmm. But yeah, any questions, concerns, guys, before we get off? It's been like 2 hours, so your heart still raised when you take a trade? Nah. Nah, I wouldn't say my heart rate rises. Nah. Bro, bro, if your heart is racing when you're trading, bro, you're putting too much risk on, bro. Like I still get anxious, but I wouldn't say my heart like is like pumping. Yeah, size down, bro. You're putting too much risk on. Yeah, because if the risk is I mean, if the risk is managed, then there's no issue, bro. But I mean, it doesn't matter what you're risking, bro. I'm just saying, like, if your heart is racing, then you're risking too much. Doesn't matter what you're risking. But yeah, any last questions, concerns, guys, before we hop off? Are you trading prop or personal? No, I've never traded props, bro. The only reason I'm ever gonna trade a prop is to put like my bots on there. Oh, oh, this is probably come on. It looks like it's gonna go for equal highs here. Nice. I hate that it's so late in the day. Yeah, like we're 2 hours away from closure. Or yeah, about just about three. That'd be cool. It gets dark so fast, man. Yeah, this is neat. Um, yeah, the fear of blowing accounts. Well, sometimes you just gotta like I don't know what the best way to go about that is. It's because like everyone has a fear of losing, right? Like I mean, I don't know about everyone, but I have a fear of losing, obviously. Like people don't like rejection, people don't like losing. So like sometimes you just gotta suck it up.
Yeah. Pero,
Mhm.
do you still believe in trading full time?
If I'm making like six figures a month, yeah, well, that's like the only way. But like if I'm making that much money, I'd already be moving it somewhere.
'Cause I remember I used to say never trade full time, maybe have a job or something.
Yeah, it doesn't for most people it doesn't make sense. Like because like let's say you've been trading for 3 years and your edge is working, but like edge is not something that is, edge is something that's continuous. Like so your edge right now may not work a year from now because maybe within that year you start seeing different patterns, you start seeing different things, you start noticing um different intuitive things. So that changes your edge. You know what I mean? So whether that's good or bad is like case dependent, right? But um But just because your edge is working now doesn't mean it's gonna work like forever. So like you respond either by continuously improving, but like then what do you consider a continuous improvement? Like it's not a dollar sign thing, it's a skill set thing, it's like an efficiency thing. So like can you do it? Sure, but like I just don't think it's ideal. That doesn't mean like I wouldn't do it. Like I would love to do it, but like I have to say that it's not ideal.
So, when you say your hedge might not work, probably like all these models you use now, your rules. When you say that might not work in the next couple of years, does it now? Are you now saying that price is not consistent?
No, it's not a price thing, it's a you thing. Like
Hmm.
I like for example, like I'm always like trying to build. I'm always trying to do more. Like, and that's good and bad because you don't know what the new factors will do to your edge or do to your stats or do to your consistency. Like, but I just will naturally, intuitively start to see more things with more chart time, with more chart experience. Like what I do now will not be the same things that I do like maybe in another, because I'm what, like 6, 7 years in the trade, maybe like in the next 5 years. You know what I mean? And what I saw 3, 4 years ago is not what I would see now. Not because the price is different, because if the price is different, then if I back test, I still would I wouldn't know what the fuck to do. You know, like anybody who back tests is able to read patterns in the past. Anybody can do that. But that's because of your current edge now, right? Like back then with your edge, you probably wouldn't have seen those trades. And in the future, in a year or two, you might not see the same stuff solely because your experience is building up. Like there, I was looking up the stats too. Like you know that by default, um, after 5 years, 7% of traders become profitable. And mind you, that's 7% of the leftover. People quit in between the first year to the 5 year. Like I did some research on this stuff. It's pretty neat. I sent it in the private group. Like if you solely wait 5 years or you have 5 years of IQ, 5 years of experience, 5 years of intuition to build upon each other till that fifth year, you have a much higher probability than you do of doing it in a 1 year. So is that because of the edge? Is that because of the system? Is that because of price? No, it's a you thing. It's 100% a you thing. It doesn't matter what you're trading. But have you built up 5 years of experience, true IQ, right, to potentially reach that 7% threshold? Right? Like people say like that 90 something percent of like people will like always lose their money. I mean, yeah, but this number would be so much higher if the 100% of people would have stuck through, right? Because by the time the fifth year comes around, it's probably, I forgot what the number was. I I'm gonna take a just an oddball guess. Let's just say it's like 8%.
Hmm.
So if 7% of 8% is becoming profitable, then we can just do the math. Like is 0.07% or 0.07 times, that means pretty much it's like a 0.56. That means half or 0.5 of every 100 people at the 5 year mark, which is about, I think, seven, well, actually, out of eight, sorry. So that's less than one person, one out of every eight people, technically, after 5 years will become profitable. But if those numbers are pretty much the same as the 100%, which means like, let's say 90%, then these numbers become different. Whether it's better or worse, we don't know, but the odds would be a lot greater or a lot higher per se. So solely because of the 5 years. So it's not about a price. It's not about time. It's about you putting in time, effort, energy, etc. You see? You feel me?
Yeah, I can hear you. I think that is true because why well
No, no, no.
personally
It is true. Like I'm telling you, it is true. Like if you stick 5 years at least, your probability of becoming a profitable trader is around the 7% mark. And
hmm,
shit, tell me what the odds are for a doctor, lawyer, etc. Like professional soccer player, like professional athlete. Like the odds are actually way lower, I think.
yeah. But personally, I don't think you need so much IQ to be a trader. You can be the dumbest person and just come on board and just probably learn something. Imagine if maybe you have someone that just doesn't know so much about books or is not good academically and just come on board. They could actually learn how to trade instead of focusing on IQ. You get what I mean?
I mean, IQ and books are different. Like you don't have to be book smart to have high IQ. Like to have high IQ just means that you're a good problem solver, a decent problem solver.
Yeah.
Like you do need some type of IQ. Like if like honestly, if I knew somebody who's like I'm not gonna I'm okay, I'm not gonna say the R word. Like let's say my friend, like let's say this guy I know, like he's not the brightest guy ever. I would not expect him to come in here and fucking do it any quicker than somebody who is a problem solver, right? Like if you stick someone who has no type of, let's say, formula education, etc., compared to like a fucking scientist, right? It's not because he's a scientist, but it's because of the qualities that he has as a scientist, whether it's high IQ, right? Whether its problem solving skills are really good, whether his ability to deduct processes is very good, right? Whereas compared to the regular civilian who doesn't have, like, let's say a formal education or stuff like that, then
Mm.
he's gonna have to more so grit his way into success here than this guy, because this guy already has processes. He already knows how he can learn. He already knows he's already done something that's difficult. So that belief aspect is way like easier, right? Like people who've done really hard shit before will probably have a higher chance of becoming a decent trader than somebody who has never done anything in their lives and now becomes a trader. That's not because of trading. That's because of your characteristics, your self awareness, etc. So like I think you do need IQ. Like you need to be some type of smart, bro, to be able to deduct processes, deduct patterns, right? Add dimensions to patterns, right? And then how do you formulate that into a thought to then make a projection? And then how do you execute on that? Like it's very like you know what I mean? It's very like I do think you do need some IQ. Like I think
Mm.
the fact that all of y'all are in this call right now, that means you guys are at the very least not dumb. You know what I mean? Like I like to think I'm at the very least not dumb.
Mm.
You know what
I,
I mean?
I think that might be true. At some point, I used to take like I'm still in that phase of building, but at some point where I used to take all trades they're always in loss. I'm a user experience researcher. Like I do user research and front end stuff. So I had to start thinking the charts like I'm doing user research and asking questions, like asking different questions. So trying to equate it to get the right answer. So I think it's right trying to, if you're not that smart, it will be very difficult to actually pick some stuff. Just like you are explaining momentum, you are explaining those difficult terms.
Mm-hmm. Exactly. So yeah, I do think you do need some IQ. I think like this is really hard, but there's also other hard shit to do. Like honestly, everything's fucking hard. Like if you want to be great at anything, like it's all gonna be fucking hard. But I think there's also like if you know how you learn and you know how you're able to digest information better, if you know how you get better at something, then that's like a really big plus with trading because it's like there's millions of ways to become a decent trader, you know? Well, I mean, a good trader. I'm not gonna say decent. There's such a thing as a decent trader. Like you're either good or you're not. Um, but there's thousands, hundreds of ways to become a good trader because all you need to do to be a good trader is to be profitable. And to be profitable, you just have to be slightly right at certain times,
Mm.
bare minimum. So if you can understand the processes on how to learn how to get somewhere from A to B, if you know this about yourself, then you have a big plus. Like I'm a visuals guy. Like I don't like I wouldn't say I'm not good at learning with text or with reading, but if I see something, like if I see diagrams, images, etc., then my ability to retain the info is better. And I don't need stats to know that. I just know that because I know that that's how I learn. That's how I've learned in the past. That's how I enjoy to learn. You know what I mean?
Do you have a degree
Yeah,
or
I have a
something?
I have a finance degree. Yeah.
A master's or?
No, I don't have a master's. Fuck no, no, no. I
That's
thought
fine.
about it for some time, but I'm like, nah, nah, I'm good on school.
Yeah, that's very good then.
I did enough years, bro. I did enough years in school. I did like 6 years in college.
Wow.
Yeah. And like, I don't know, like if I didn't go to school, I wouldn't have become a trader. So like I'm not one of those guys that's like anti-school.
Hmm.
I'm not anti-school, but I am pro conviction. Like whatever it is you're gonna do, like be sure you want to do it and do it. If not, GG, bro. Like good luck.
Yeah, that's true. For me, I kind of believe that how you do one thing is how you do everything. Like if you want to go to school, make sure you do well, and you should do well in trading also, or something. Like for me, I see trading as you shouldn't be your only backup plan. There should be another backup plan just in case you fail at it. Then you have an alternative to go back to instead of focusing more on trading. Then if you fail, you feel like you are a failure because it
Mm-hmm.
might take you years, maybe 10 years, some people 15 years, and they are still struggling at it. So
Mm-hmm.
if you have a backup plan, maybe you go to school, you can still have a job, then you know that whatever happens, you still have a source of income.
Yeah, definitely. Like the whole point of me trading is just to build capital and then do other shit.
Hmm.
That's my whole point. Like I'm too deep into this to have a job, but I know that shit can change. Like I don't know if that's just like there's a word for it. I forget what kind of bias it is, but like there just could come a day where I think that, oh, like fuck, like all of my methods stop working, like I'm fucked. Like this is it. I've been lucky up until this point. And it's not a thought that I regularly get, but it's a thought that I think I can possibly get. So I want to make sure that I hedge myself and I'm good all around so that even if this does happen, like I'm still good.
Hmm.
But yeah, this ended up playing out for one of the members. I forgot who it was. That ended up playing out. It's good for them. Yeah, this looks like it's wanting to flip. But yeah, any more questions, concerns, guys, before we hop off? Um, but yeah, hopefully I want to have everything done soon. I want to have everything done with the books, the indicator. I'm honestly pushing to get it done this weekend. I'm probably not gonna leave my room this weekend. And then Asev is still doing well. I still don't know what I want to do with this, to be honest, but it's growing. It's still growing. It hasn't updated yet, but this week we did 2 point something percent. It's about $1,100. But